Gather round. It's time for your Real Estate Chalk Talk with the Hittner Group. Listen closely as your coaches discuss the culture, the economy, and the political scene, and how it affects your home and your real estate investments. Real Estate Chalk Talk is where you learn the science of buying and selling real estate and the art of living in your home. Your education begins in 5, 4, 3, 2, 1.
Hey there. Welcome to the program. This is your Real Estate Chalk Talk with the Hittner Group, hittnergroup.com, Hittner Group, all one word, hittnergroup.com, 612-627-8000 is the number to call, 612-627-8000. Give us a ring-a-ling-a-ling. We'd be happy to have a chat with you about your real estate needs. And, of course, that first call is with no cost and absolutely no obligation. Well, we are
August 1st.
No kidding.
Crazy, right?
Crazy. State Fair month coming up. Market will take a little quiet time in August.
So?
Oh, yeah, it always does in August. Yeah.
It's busy.
State Fair quiet time.
State of mind, Keith. State of mind.
Yeah. Well, based on what's happening in the seven-county...
Take a look at the numbers.
Yeah.
See how they
seven-county
shake out.
metropolitan area, Keith. Not national, not statewide, seven-county metro. All right, here we got it. The inventory is up 32.7% from the first of the year. Isn't that incredible?
Nice.
32.7% increase. So anyone that's saying that, well, there's nothing to sell, nothing to look at, yeah, there are 7,144 homes for sale in the seven-county metropolitan
First time
area.
we've been over 7,000, Keith.
Yeah, well, last week was just over 7,000.
Was it? Oh, I thought we were high 60s.
Yep, no, 70. It was 7,063 last week.
Okay.
So, but 4,800 at the first of the year. So
Wow.
that's a significant increase.
But what's a typical increase? Because we see our lowest inventory point is January 1st every year, and then we see our peak in about July every year, and then we see it drop back off as we get towards the end of the year. So if it's up 30, what did you say, 32, 34%? You know, what's your typical year increase?
Well, we're up, just as an example, from 2022, we're up 52%. So, I mean, there usually it's going to be about 15% increase in
January to July?
January to July, about 15% increase.
You're making that up.
No, I'm not.
Yeah, you are.
Hear me.
No, I'm not.
100%.
100%.
If you say anything convincingly enough, I told my daughter this yesterday as I was
What's that?
driving. She asked me a question about something. Oh, it was my son, Keith.
Okay.
Young Keith asked me something, and I responded to him, and I was like, how'd that sound? He's like, good. That sounds about right. I go, I have no idea. Sometimes if you just say things convincingly
With
enough,
authority,
people will just believe you.
But I don't do that. I have straight facts.
Oh, my gosh.
Okay, listen to me now.
Straight facts, homie.
Straight fact.
New pendings this week, 900. Isn't that something? It's just like 900. Last week is 904. It's just like so steady Eddie. But what we have now is sales are steady, running about 900. 1,000. It bumped up one time a year ago. It was 946. Just 900. But new listings increasing, new inventory coming on the market. So that's good.
How many new listings came on last week, then, Keith?
Well, obviously, if we went from 7, I don't know how many new listings. That's a good question. New listings.
It's got to be on your little chart there
Don't know
somewhere.
Well, I know that if 900 sold, Calvin, let's do the math. So we started with, it's just like an inventory roll for it. So we started with 7,063.
Okay.
900 sold, so that's 6,000 approximately.
Yep.
And now we have 7,100. So
about
that tells me
1,100
about 1,100 came on the market this week. Just doing this is basic math. That's basic math, Keith.
Basic math.
Okay. New solds, 1140 closed. It doesn't really matter. I don't look at that close so much because there's so many variables in when something closes. We are seeing more closing dates that are more normalized, though. Normal closings.
What do you mean by that?
Well, I'll give you just an example. People are not accepting like extended closings on properties because they don't have the confidence that something is going to close without a problem, because there is, like, I was reading with the National Association, in the last couple months, the fallout rate is so high.
Cancellations?
Cancellation rate,
Yeah.
really high, like in the 30%. So when you submit an offer, and you know it as well. We got the house to sell, so we want to give ourselves some time. But we're really confident that that house is going to sell. So we're just going to push the closing date out, and then we'll move it up when
Right.
to coordinate. The sellers on the other side don't have that confidence because now they've had their house on the market for 90 days.
Right. Yeah, I have a
and they're like,
situation right now. I'm selling this house in Bloomington. It's a beautiful home. It's $870,000. Has a pool, all the stuff. Sold it right away, multiple offers, and that buyer bailed. Now it's been on the market for 30 days, maybe 3 weeks. I think it's nearing 30 days anyhow. And then we have a buyer that's kind of sitting in the wings, waiting. They have a house to sell that's probably 750-ish, and they want to move to this house that's 870. It's a hard pill to swallow to saddle up with them and, accept a contingent offer when the property is not that far off in the price range of
Right.
the
Of
house
what
we're
you're
trying
doing?
to sell.
Yeah.
In the sellers there of the backup house, there's all kinds of variables and reasons why not to put the house on the market because of kids and dogs and pets and summer and school,
Sure.
all the things that you deal with as a family. It's tough to sell a house.
Yeah.
Just like logistically,
Yeah.
when you have a full family in the home living there.
Living there.
Yeah. And so, they're trying to do some things off the market just to
Mhm.
avoid just the full push because they feel like if we put the house on the market and it doesn't sell, then they're in a situation where, it gets stigmatized or whatever the scenario might be.
And the disruption. I mean, it's hard.
Yeah, you're showing your property,
Mhm.
3 dogs, 3 kids. The summer sports happening, kids
Yeah.
are at home. It's just
a lot.
It's a nightmare.
There's a lot.
So maybe we get the kids back at school and we do that fall push for them, and they're still hanging on. We had an open house at this property, and anybody else that would come through that maybe this property didn't fit for, we got this other one that's off the market, that's also in Bloomington, that also has a pool. It's just $110,000 less than this one, or $20. So it's a good segue or transition to try to sell both properties.
Sure.
So everybody can
Win.
get what they want. So that's the project. It's kind of a fun project. It's getting frustrating though.
It does get frustrating. Just for a year-to-date standpoint, just think about this. In listings in 24, 28,209 listings have come on the market this year. 18,077 of them have sold. So we have 28,000 properties that have come on the market. 18,000 have sold.
So 10,000 lagging.
10,000 leg. We've got 7,000 that are on the market right now.
So 3,000 went off. Just
3,000
math.
just canceled.
Wow.
Just went off the market. That's quite a bit. Last year, that number was 25,000 had come on the market this time period, and 17,450 had sold. So really, only about 500 more have sold this year than last year, year to date. So the market definitely has had an impact. Talking to some people this week, and they're talking about inflation and the impact that the inflation has had just on their household operation,
No kidding.
on how they're operating.
Yep.
Trying to buy groceries for kids and stuff, and the groceries, their grocery bill is up like 40% for the
Wow.
things that they buy. The kinds of foods that they buy, and the government says, oh, it's not that bad. It's bad for a lot of families because they're marginal anyhow and just on getting by day to day.
Yep.
And then all of a sudden it's like, oh, well, groceries are going to be $200 more this week
Yeah.
than they were last year. That's $800 more in a month. It's like, wow,
Right.
that's a lot of money.
That's why I started a garden.
Yeah.
I'm not even kidding. I've never had one before. I started my own garden. Now I'm canning all my own food. I mean, because
It's better for you
it's
anyhow.
better for you anyways.
Yeah,
and,
better for you. It tastes better
That's
and
right.
all that stuff. Inman News has a report. They came out, I was reading yesterday, a report 70% of all agents, now 1.5 million agents that are licensed real estate agents, 70% of them have not sold one house this year.
Wow.
70%. So really,
Seriously?
of the 1,700,000 or 1,500,000 agents, you've got, 500,000, give or take,
Active.
that are actually doing any business. And of those 500,000, 30% of them have sold one house.
Wow. Well, we were just at we had a national, regional meeting and stuff like that, and they said in the past you'd always talk to, what realtors are you calling on? Who are you getting in front of? And it used to be like, make sure they're doing,
Doing a deal.
20 20 deals a year, and
Right.
now it's like, well, if they're doing 6 a year,
Right.
they're probably an A realtor. I'm like, 6 a freaking
6,
year?
yeah.
You're an A? No, you're not. But your stats would bear that out.
So
Right.
as a homeowner now, if you're thinking about two things, if you're thinking about buying a home or selling a home, you need to be aware of what kind of activity that agent's involved in.
Right.
Because if you've got an agent, your niece just, got her license, or, oh, yeah, my sister's a real estate agent. It's like, you may love your sister, but when's the last time your sister sold a house? Because if she hasn't sold a house this year or last year,
Yep.
you maybe want to go with the guy next door who's actually doing business.
Or give us a call at 612-627-8000. That number again is
what a segue.
612-627-8000.
So good.
You can log on to our website anytime at hittnergroup.com. HITTNER group.com. There you can check your home value and
Oh
look
my
at all the properties online at hittnergroup.com. And we'll be right back.
Hey, welcome back to the program. This is your Real Estate Chalk Talk with the Hittner Group. HittnerGroup.com, HITTNER Group, all one word, HittnerGroup.com, 612-627-8000. Okay, so we've had so much disruption in our real estate industry since COVID started. I mean,
Since COVID started.
since
Okay.
COVID started, because first there was the big shutdown deal, and then we couldn't show houses, and everyone had to wear masks, and had to have hand sanitizer.
Remember I showed a house with a motorcycle helmet on one time? Like a full face motorcycle
Oh, gosh,
helmet,
that's funny.
mask and
Good Lord.
everything.
Yeah.
I made it through the whole thing. I never followed any of the rules.
Whatever. I saw you with a mask
You're
all the
And
time.
I bought the brand. I had the trademarked mask. Had it in my
Liar.
pickup truck, but I hated wearing it. Anyhow, so that we bought
I
shields.
never did anything.
He had one on
cool.
last
we
week.
bought shields.
He had one on last week.
Yeah, he's in
Oh, yeah,
Starbucks.
yeah.
or
I was
something.
all
Sitting
alone.
there
I was
It was
alone.
a Starbucks.
I was alone
Drinking
in,
coffee through the
alone
mesh
in my
mask.
car.
Yeah.
Yeah.
Drink it through the. I had a little hole cut in there for the straw.
It's fine.
All right,
Super
so we
safe.
got Tera here from GCS Title. So we're talking about the disruption. So the real estate side of it, I think, is we've been talking about it ad nauseum for a few years now about the lawsuits and how that, and it's going to change and this and that, and there is a lot of change coming up. The mortgage industry had their blow up a few years ago with Dodd-Frank and the all of that, and what happened there. Now rates have spiked up. And they're settling in a little bit now nicely, but finally. But I mean, that was like a year and 18 months of horrible,
Just
Volatile.
volatile
Right,
stuff.
Market, yeah.
Yes, it was.
And now with the title work, we've got when Dodd-Frank first came up, it was like, oh, you can't own a title company. Everybody was liquidating their title companies because they're afraid they're going to get sued and on this, that, and the other thing. Now it seems like it's just the opposite. Every Tom, Dick, and Harry is starting a title company. I don't understand how they can do that. Can you explain that to me?
Yeah, I think disruption happens when you're unprepared. And we had seen this coming. We were seeing more and more affiliations, business affiliations, joint ventures, stuff like that. It's happening all over. It's happened to us. We've lost teammates due to starting their own title companies with preferred vendors. Do I think it should be happening? No, absolutely not. I think that people need to stay in their own lane and do what they have to do, but it's happening, and I wish I knew exactly why. I think people are just scared. I think people are just worried.
scared
like,
of what? What do you mean by scared?
I think that there's so much chaos going on, especially with the NAR settlements, all these different things, and people are like, what are we going to do? Is it going to be all these unknowns, right? And unknowns, and the market had shifted, and there was all these different things that are happening out there that I think that people were just like, what do we need to do? Do we need to start a JV with people? Do we need to start a title company? Some of these mega teams are starting title companies because I think it's so easy, right?
Right. Yeah.
Well, I think what's misunderstood about it's a revenue grab.
It is.
I mean, that's
all it is.
to be clear.
That's what it is.
Let's
right?
be
Yeah.
clear. That's what it is. So the revenue, the team revenue, is down because there aren't as many sales. They're looking forward, and they're saying, with the new laws the way they are, where you have to have a buyer rep. Coldwell Banker just brought up a thing this week on our portals now, where we input all of our stuff, where you have to put in when you sign a buyer rep, with somebody, you put it in there just like you put in a listing agreement, so that they've got documented on there. And the Department of Commerce is looking at, when they do audits of files, they're looking at the buyer rep and the list and the purchase agreement, and they're looking at the dates. And if the dates match, and they consistently match, they're going to audit all of your files now, because that's a signal that you never sat down with somebody, had that conversation with them. Because
if it's the same date,
sure, because you don't
the buyer representation agreement dated the same day as a purchase agreement. So
Yeah.
in some cases that might
the
happen.
purchase agreement.
Yeah, it may happen. It's
In
not
some
like
cases
if
that might happen. You might meet somebody.
Yep.
They call you on a listing. You show up at the listing. You talk about the buyer process. You sign a buyer representation agreement. You go look at the house. They want to make an offer. You write the purchase agreement. Like, that can happen.
Yeah.
But if it happens every single time consistently, then more than likely you're meeting somebody months before, and you haven't had that appropriate conversation with them regarding agency disclosures and buyer representation and et cetera,
very good
et cetera.
explanation. That's exactly
And
right.
then you write a purchase agreement. You're like, oh crap, I never went over the documentation. Then you fill it in electronically, and the dates are what they are when they're time and date stamped when they sign the document.
And the fines for that activity are substantial. So
And that's a big reason why. That's a big reason why we're in the situation that we're in, because it happens on both sides of the table. It happens with buyer representation, it happens with seller representation and listing agreements, where these things aren't appropriately explained to people, and then months later their neighbor talks to them about it, and they're like, oh yeah, I guess I didn't even realize that, and soon there's a class action lawsuit, and we're changing the process in the country. That's
So
how it happens.
with that, when we're talking about title, then
Yeah.
So what is when someone starts their own title company, they're whatever you call it, affiliate, we agree here it's a money grab. They're
It
trying
is.
to get the commissions. So there's only so many actual insurers out there.
Yeah.
I mean, who are the
the
title?
underwriters.
You're as a title
but that-
company. You're an agent for an insurance company, isn't that right?
Yeah, we have to be insured through like our underwriters.
Yeah.
So there's, the three main ones here. There's other ones too, but that's where I don't understand. Like, how are all these smaller, unless they have like an investor in there that's able to put that money into getting like the underwriters to approve them? Because it shouldn't be that easy. Just same with.
I don't understand what you're saying. So is it similar to like doing FHA loans, where you have to have a certain amount of money in a mortgage company? So like,
I think
that's
they're
the thing, right,
investing
Calvin?
in it. I don't know. Yeah, but like, how is just anybody able to get an underwriter to insure them? Like, you need to have the underwriter to have a title company. Same with real estate license. They're making it so easy to get your real estate license. It shouldn't just be anybody going in there.
Well, that's why
3 weeks
as
later,
you're, as
your
you're talking
license.
about this, Keith, I'm going, look at your own industry. You're
That's
like,
Well,
you're saying to her,
and
like,
that's what I'm
oh
saying.
my gosh, how
Yeah.
could that be? Look at your
Yeah,
industry.
and
No-
look at yours too.
yeah.
Same thing.
All of us are kind of in the same boat. Like,
Yeah.
the lenders are now having the affiliated partners.
Right,
Title
now-
companies are. I believe that there's opportunity in chaos. However, I think we need to kind of stay in our lane, and just be able to give value and educate the people on what we're able to provide to them. And I think that's where we were lacking, probably in the past, is educating the consumer. The consumers are doing a lot more of the legwork now, and if we're doing the educating and working with the agents, working with the lenders, communicating and bringing that value and showing them why use us, why use title, why use a lender. And the good ones, I think, will survive, and some of the newer ones, unless they're not being completely diving in and getting the education to educate their buyers and sellers, they're gonna kind of peter off.
I think that because we were when we had RHS Realty, we had RHS Title. We were partners with River City Mortgage. The parent company, had interest in everything.
Yep.
And then it worked very, very well. It was a smooth thing. We had our clients, we got them the money, we got them to the closing. But everybody, they were very separate businesses.
Everybody stayed in their lane.
And they
Yes.
operated very separate. The people were professional, and that's all they did. So it wasn't like in the micro level we have agents who are also loan officers.
Yeah.
So it's like they take off their real estate agent hat and they put on their loan officer hat, and now they're going to do the loan. And and by the way, then I have this affiliate a title company, and now I'm going to be at the closing table doing the closing,
Right.
talking the docs
I'll be your
too.
closer as well.
It's
Yeah.
like
Open the drawer, get that hat
Yeah.
out.
that's
Right.
kind of jack of all trades
Yeah.
and master of none, because
Yes.
you just that's a
Who's doing that? You've seen somebody.
oh yeah.
I've seen it too. I don't want to name any names,
Yeah.
but we've seen it.
Yeah.
I'd like to name names.
And it, try,
So I
Right.
mean, to me, that's a dangerous situation
It
there,
is.
because you've got an individual there who is trying to, do too many things, and something. It's only a matter of when that blows up, and then there's another lawsuit that's going to come down, and there's going to be all kinds of new regulations, and it just that greed, and that's what it is.
It is.
Simply results in nothing good.
Well, it's interesting to me that on the real estate side, you guys are clamping down on all these things. And on the mortgage side, now you can have your realtor can be a loan officer, and I
Yeah.
can now be
Yeah.
a realtor. And,
Right.
And they changed the laws recently on some of that, giving us you can do FHA loans even now, and you can do. It's like, what are we doing? You guys are clamping down. We clamped down earlier, and now we're saying, well, I don't know.
Now you
know,
get
you wanna
looser
come
again.
over?
Deregulate.
Yeah, come on over.
Yeah.
Be a loan officer.
Be a loan
Do
officer.
a couple.
And I'll
Yeah.
probably I'll be a realtor if I
Yeah.
can find a deal. Because you guys just unlock doors, right? It's all there is.
nothing
to it.
else.
Not anymore. You just leave all the doors open.
Yeah.
Oh, now-
Keep 'em up now.
No break
I
anyways,
just
yeah.
It's a crazy time.
I think we're missing the big picture too. Is we do have, as a title company, as an agent, as a loan officer, we do have that fiduciary duty to be able to educate and explain to them, and not have. That's why they hire us. That's
Mhm.
why they're using us, and so we have that. So that's more important to stay in our own lanes, so
Well,
we can be an
if you
expert in
wanna-
that area.
We're going to name names on our blog. So go to hittnergroup.com. Check out the blog site there at hittnergroup.com, where we name names.
Yes.
Give us a call anytime, 612-627-8000.
Welcome back. Thanks for staying with us. This is your Real Estate Chalk Talk with the Hittner Group. HittnerGroup.com, HITTNER Group.com, HittnerGroup.com, one of the oldest real estate websites in the continental United States. Proud to say that. 612-627-8000. That's 612-627-8000. We have helped people, God, I don't know, probably 10,000
Couple, 2, 3 houses.
families we've helped
2 or 3
over
houses.
the years. I mean, it's ridiculous. No way to count
You
it
ever-
anymore.
You ever track that, Keith?
I
Do you
tried one time, and it's just that we go back so far, Kelvin. That it's back before there was records. There was no online. When I started, there was no online MLS.
Okay.
It was books, so it was all paper files. My garage at one time was full of lateral files, the big lateral file
Yeah.
cases,
Yeah.
full of files. Full of files.
Do you still have them?
No, I shredded them all.
Okay.
Yeah. They had Social Security numbers on. They had
Yeah, you better-
all
yeah.
the good stuff on there, so they went right into the shredder.
Good.
But yeah,
That'd just be interesting,
I know it. I know it'd be so good. And before, we didn't even have databases. I mean, it was on file cards.
I know.
It's just like ridiculous. Anyhow, so now we're talking title, and we're talking our real estate industry in general. And this is important for people who are listening, especially if you're a real estate agent struggling, wondering, what's going on. Pay attention. So when you are looking forward now in light of the NAR settlement and in light of the fragmented market, where you now have buyers who are going to be paying their agents directly, and somehow the mortgage industry's got to figure out how that's all going to get the ability to get on the HUD. Sometimes you're going to have the buyer's agent commission being on the selling side, sometimes on the buyer side. I mean, what's the process? Is there a process for making all that happen? And what are you guys doing?
Well, we kind of seen this coming down the pipeline, and we were prepared for it. So typically, we would only talk to the buy side and the sell side if we have the one side of the transaction when we're scheduling.
Mm-hmm.
Now, because of some of the changes and the changes that are going into effect on August 15th, I believe,
Mm-hmm.
we're just doing our due diligence, and we're calling on both sides and talking with the lender and making sure all three of those pieces matches, instead of just talking to either the buy side or the sell side. We're talking to all three. We're talking to the other title company. We're talking to the other agents. We're looking at all those things and then having 2, 3, 4 sets of eyes on it, because there is some changes that have been made already if they're not doing it. So we really haven't had a lot of changes yet. I know that we're proactive with the new forms that are coming out. But right now we're just taking the steps and already getting prepared for it. So it's not like a big change for us on the 15th. We're just making 2-3 extra calls.
So you want to be communicating with both sides
We
to
are.
understand what you need to have on the settlement
Yep.
statement, right?
Yep,
'Cause
and making sure that
sometimes-
those match.
Yeah.
Yep.
What I find is that with our company, when you turn in our form in our portal, intranet, they are wanting all of the information now. Because I just
Yeah.
got emails yesterday and said, okay, I need the phone number, I need the email address. Well, I never put any of that stuff in before because I didn't want them to get marketed to.
Right.
So I
Yep.
just didn't put it there. They're emailing back now and saying, we need all this information in here. So they're cleaning up the files going forward, so that if there is an issue, kind of hard to say that you've sat down and had a conversation with a client and advised them correctly, and you don't even have their phone number and email address. I mean, as a broker, the agent may have it, but as the broker, you're supposed to be supervising the transaction. And obviously, if you don't even have contact information from what is supposed to be your client,
Yeah.
kind of hard to make the case that you're doing a
Right.
good job of
Yeah.
supervision.
Absolutely.
So they're being a little bit more petty about getting that information in
Probably
there.
good.
I think it's
Right.
good.
It is good,
I
and
think
we
it's
need that too. It puts less on us because before, which would take less time, it's double the time per file to make sure everything's correct and on time, and making sure that everything matches. And so, whereas like I said before, we were calling the one side, now we're calling two sides, double checking with the lender, and so just making sure that everything's done correctly. Not
Now-
that we weren't before, but
Yeah, I understand.
just-
But during COVID now, we stopped having these group closings. Where both parties were at the closing table. Do you think that's going to continue now, or do you think that you're going to maybe start seeing some closings again like we had in the past?
I don't think it's going to be like it used to be.
Okay.
Unfortunately, like I liked having the everybody together at the same table, but I am starting to see more people come in. I'm starting to see lenders coming back in, sitting at the table. The agents where they weren't before, the families. But I haven't seen. It's been quite a few years now, or 4 years, I suppose, where both sides are sitting at the same side. Which I think I've liked it before. Because
The
then
only
they can
thing
ask you questions, but then if it's a bad deal, then
Right.
it's uncomfortable.
Well, then it could
then we'd
be-
have separate rooms. But
But what I
That
liked
was
about
rare,
it,
though.
yeah, it was very rare when it was like it was that bad.
You'd walk in as the agent and be like, hey, we're going to need separate rooms.
Yeah, exactly.
Yeah.
Final
But I kinda
walkthrough
liked
didn't
that.
go well. And
Yeah,
now we're,
yep.
in a
They're fighting
in a
and-
contest about, what was on the carpet, what wasn't.
Yeah, I
and
didn't
we're just
see
gonna
that
have
before.
To need
Yes.
separate rooms here.
I
And it
think
was
You
always
took the raised
intense
garden
deal.
beds. What the heck, But
Yeah.
so I don't know if it's gonna go back to the way it was. I know we did a lot of online closings, those Ron and Rin closings during COVID, where we were doing online. They'd have to show their ID and
right,
stuff.
right.
We're seeing less of those now,
Yeah.
where people are
Oh,
coming in.
Yeah.
So
We just did one this week when a lot of times when we're doing them out of state, we'll do
Yeah.
those yet. But
yeah, it's nice. It's a nice option to have if somebody's like,
Do
I'm
you
going
ever-
on vacation. We
do you
have
ever
a
get
separate.
concerned that we're going to get away from closings completely and it'll all be online?
Yes.
Yeah.
I do.
Yeah, that's where that's
I hope not.
Well, that's
Right.
what
That's the
that's what the big aggregators want.
right.
The
That's what they're
Zillows
pushing,
and
but
the
yeah.
Realtor.coms. They want to control the entire transaction.
Yep.
They want to have the properties. They want to have their own agents doing it. They want to have their mortgage company doing the lending, and they want to have their title division
Allison.
doing the closings.
But even outside of that, Keith, do you think not one company controlling it, but do you think it will be where, hey, we can either go in and do it in person or you can e-sign it? Most people are going to say, oh, I'll e-sign, don't you think?
Mm,
Or do you think people like to come to the table? I loved it when we had closings with both parties because as a lender, now I meet the listing agent face to
Yes.
face, right?
the only thing
But,
about the
and I don't think that will come back. But
just to comment on the e-signing and the
Yeah.
virtual closings.
Yep.
And the not having both parties. There's two sides of the coin. One of them is if there was some issue that was unresolved, many times you say, look, we're going to all get together at closing, we'll just resolve it then and sign off on it, be done with it.
Yep.
That could result in a 3-hour closing, right, where people are fighting with one another and I don't agree and blah, blah, blah. So having the seller or the one party not be there, it's like you have to have your ducks in a row now because there's none of that. Nobody will be there.
Right.
So when we go in to sign, it's done. So it does force everybody to get their ducks in a row so that you're prepared at the time of closing. So when you're doing these virtual things, because things do come up, the final walkthrough, You know, you go in and the refrigerator in the garage that was supposed to be part of the purchase agreement is now gone.
Yep.
Okay. Well, when you're e-signing anything, how do you resolve that?
Mm-hmm.
Right? So then
Exactly.
it gets a little clunky
Yeah.
with that. And the person who's signing it obviously is not there.
Right.
So then they show up the next week when they get back from vacation and that refrigerator is gone.
Yeah.
Mm-hmm.
You know, and now it's a big deal. So
Those things are to consider, and also fraud. And I mean, you've also got AI who is now copying your voices and your
Right.
pictures, and hence the reason why you need title insurance too, to protect you for that exact reason.
mm-hmm.
You know, if people, they have the option to waive the insurance, but it's like driving a car down the road. You don't know you need insurance till you need it, and your whole life's over because you just ran somebody over, or somebody just did a fraud on your house.
Right.
Those are the reasons why you need that. And I think that could be an issue if it did go to complete e-signing,
I agree.
where the fraud, you'll see a lot more fraud than we already are.
Mm-hmm.
And so
In person is a little bit
in person
hard.
is
Is
harder to fraud.
harder
when you're,
to
yeah.
harder to fraud someone when you're sitting across
exactly.
the table from them.
So
And that's in that because we get calls from sellers. You know, we have a sale, and then you reach out to them, and they're like, "Am I supposed to be talking to these people?" I mean, well, they'll call and say, "Should I be talking to this person? Is this legitimate?" Yes, it's legitimate.
Yeah.
Who is it? Yeah, and that's the in-person side.
Yeah, the other thing I think that's important at closing is just the fact that the closers, especially like at GCS Title, I mean, they're going through the documents one last time, touching on some things. I think the lenders should always be there touching on some things, but then talking about homesteading and the importance of that. And when you e-sign, I mean, I e-sign docs. When I did my property with you, Keith, you're just click on the big blue pen, like,
you're signing to sign,
yeah,
but not
done.
knowing
What did I do?
Yeah.
Yeah.
You know, and
Yeah.
you don't know what you
You
did.
just bought a house.
Yeah,
Mhm.
right?
Yeah.
So I think it's really important to still get there in person, but
I
you
agree.
should be in and out in 30 minutes, though.
Yeah.
I mean, that is kind of nice.
Should
that
be-
it's-
yeah. If all your ducks are in a
faster.
row and you have a good title company, good agent,
And
I
the
know
money's there.
yeah,
Money's
and the
always
money's there,
baby.
then yeah.
Yeah, it depends on
You
which.
got the wire yet?
Yeah, exactly. Are we waiting? How much communication? We got 50 seconds left. How much communication is with the lender during the closing process? You ever talk to them?
Well, I not in my role, I don't, but our assistants do it. Our closers do quite a bit.
Okay.
And they're making sure that the numbers match up. They're making sure that everything's done and
lot.
correctly and on time. They're working with on the wire side. So there's a lot that goes into the lenders. We're talking to lenders quite a bit.
I
throughout
think
the
what people
transaction.
don't appreciate is how much work is done behind the scenes.
Right. It's a
Absolutely.
complicated process, and having a title company represent you during that process is very important. GCSTitle.com. Thank you, Tara, for coming in.
Thank you for having me.
GCSTitle.com. We'll be back with the money segment. This is Real Estate Chalk Talk. Log on to our website, hittnergroup.com, HITTNER group.com, or 612-627-8000. We'll be right back.
But we're going to wrap.
Money in the bank.
Rates are good. Pretty exciting.
You know why? Why?
Free money. You understand what I'm saying?
Hey, welcome back. Thanks for staying with us. This is your Real Estate Chalk Talk. Big money segment of the program. 651-231-2500. That's the number to call for the great rates. You know that intro said rates are great.
Yep.
It's all relative.
It's all relative.
You know, I mean,
right?
you had
Really
when
is.
rates were at 8%.
Yep.
The rates that you had were great for the times.
Yep.
I mean, you do what you can do, right?
You do what you can do. And rates are coming down. We had another good week. Most rates now that we're seeing have a 6 in front of them. You know,
Okay.
you're going to be high 6s, mid 6s. FHA, you're going to be mid 6s, 6 point. I did a refi, cash out refi. Now the LTV was great, 6.625, doing a cash out, restructuring debt for people. I'm amazed at how many refinances are starting to come in to play right now, and people are dropping that 3 and 4% 30-year fixed rate, and they're taking a 6.5% rate to clean up the 28% rate of a credit cards. And there's a lot of debt out there, folks. Man,
Over
man, oh,
$1
man.
trillion now in credit card debt.
$3
$3 trillion, is that what it is?
Yep. $3 trillion in credit card debt. They see it as a crisis, right? And they say like 40% of all payday loans are now in default. And these are like, hey, you know I got my paycheck coming up. I wonder if you could advance it and then I'll pay back.
Yeah.
And those are defaulting. And then last week we talked about
Well, the interest rates on them are so horrendous.
that's stupid.
That's
They should
ridiculous.
default on them.
And last week we talked about the those short-term loans, you know, and that we're charging 786% interest. You know, borrow $400, give me $1,500 back, total of $1,900 back. And the way the workaround was, it was a Indian tribe. It doesn't have to go by usury rates. And it's just like interesting. Interesting how, and what's shocking more than anything is people are signing up for this stuff left and right. So, one of the things that we're really trying to stress with our group is just like consumer education, making smarter decisions regarding your mortgage and your money and going through a process where we ask better questions, because we have to do a better job of asking questions. When rates are 3, it's just like, hey, what do you want? Keith, you want 3?
Right.
Got you 3. And we don't even talk about anything. I think we have to have a broader conversation with people around what's going on overall in their financial picture, and then making recommendations, because maybe 20% down isn't what you should do.
Right.
Maybe you should put 5% down, take the free $4,000 grant from Loan Depot, so you get some extra money there. You hold on to that extra money, and now we're getting rid of short-term debt. That's bad debt. There's good debt and bad debt. But we should have that conversation,
right?
Because
what's the monthly household outlay?
Yep, it's all about right.
Mm-hmm.
That's one of the things that there's a lot of reasons to use me, right? But one is I'm a nerd on Excel, so we do have a household cash flow worksheet that we do that I promise you won't get from your lender, right? So it's kind of fun. I like it because I'm a nerd on this stuff, and it's easy. So it's kind of fun to do that, but to help educate
and it's a
people
holistic approach.
It is a holistic
approach. A little
approach.
bit different approach, right?
And that when they walk away from the closing table, they are better off than when they walked in the door.
Yep. So that's been good. This week, the Fed just met yesterday. I'll give you a little wrap on that. The Fed met. The Fed left rates unchanged unanimously. Inflation goals continue to move into a better balance. They're going to make some moves here by the end of the year, but I think it's
time to the election.
Yeah, I think it's more politically motivated. Even though Powell did emphasize the fact that we are not a political agency, we do not do things politically. However, the election is coming up. We'll probably make some moves so that we can get our gal in there.
Yeah.
So it's pretty interesting to see how people are going out of their way to say we're not politically involved.
Yeah, anytime they say that, they are.
Right? So believe nothing, do your own research. So inflation's, getting in line. The jobs report came back worse than expected, so everybody, that's great. It's like, that's good. Stock market's crushing it, right? I mean, 20% year over year right now. So it's kind of interesting. Stock market's crushing it, yet the economy's quote bad, but not bad. And so we'll see some rate reduction by the end of the year. However, everyone's priced it in, right? So
you're not seeing giant moves right now.
No, we're not going to see. We came down from what, mid 7s, low mid 7s, low 7s. We're high 7s now. We're high 6s. So we've come down. So we've priced in what we anticipate is
anticipated reduction,
right? So then everybody prices.
So when the announcement comes,
we'll see nothing.
You'll see nothing.
Yeah. So, and that's what the stock market has done as well. I had lunch with Mark Van Hollen, a good friend of mine, who was in the portfolio manager with Columbia Threadneedle for years, high yield bond. We were just talking about the markets, and he goes, it's all priced in. Everything's priced in all right. And these guys price in everything that they anticipate coming down the line. So they're always working 6 months, a year out, going, okay, what's coming? Let's position ourselves now. And it's been a pretty good market for people. So that's what's kind of going on there. Mortgage apps were flat this last week.
So just to back up, when they do reduce rates, what do you think that is going to look like?
I think they're going to do they'll do at least one cut. There's a quarter. They'll do a quarter point. Some say up to 3, but one is guaranteed.
Up to 3 points?
No, up to 3 cuts.
Oh.
And then they'll do a quarter
every month
by the end of the year.
Yeah, but I don't think that will happen. So I would say anticipate one in September that we'll get prior to the election, September, October, but most likely September, and then I think we'll just run out through the election.
Yeah, unless inflation.
Unless something went really wacky, but
I don't see that
kind of
happening,
doubtful.
Yeah.
So the other thing I just want to touch on again is just the grants, first-time homebuyer programs. We've got a lot of them. Everyone that's in Minnesota we have access to, so we'll also have a conversation on that. I did find out something interesting this week. Like, you're always learning, right? So Minnesota Housing has a good program, but it's all based on income, and it's total household income. So if Tara and I are married, we have to use both of our incomes, right? If we're engaged, that's it.
To qualify for the funds.
To qualify for the funds. So now it's like, I don't want to use her income because now we don't qualify. Yep. But if we have a renter, right? And it was a household of 2. Well, if I have a renter, Keith's my renter. Now I have a household of 3. The limit went from 90,000 to about 120,000. And because he's a renter, I don't have to use his income as household income because it's only for me, my significant other, not his.
But you can use his rent,
But I can use his, I just have to state that he's renting a room from me. Don't have to use that income, don't have to use anything, just have to fill out the form that says Keith Hittner Jr., renter. And now I have a household of 3, my income limit went up. I'm like, that's great. So that's a way that we were able to do one this week where the 2 people on the application made just a little bit too much money, so they didn't qualify. And I said, is anybody renting from you? Well, yeah, my buddy Zach is renting. Like, done.
Would it qualify? Have you heard of Peer Space?
Yeah.
What's
would
Peer
that
Space?
Peer Space is where you can like either rent a room out of your house, a pool like you
Yeah.
guys have, and they can rent it out and then they can use it. Would
But
that
that's it.
qualify?
But that's incidental rental, though.
Okay, so that would be
Yeah,
something
probably
separate.
that's
Okay.
probably
One-time,
not, yeah.
one-time deal.
Long time
Yeah.
lease situation.
Okay.
Yep.
So it has to be long time. That
Has
would
to
be
be
the
a lease.
caveat.
Yep.
Okay.
Yeah.
So
Or living there.
Yeah.
Okay.
Yep.
Or
You got to
short
be
term.
living there.
So just understand that there's a lot of good programs. Now, the one thing that these folks said, now that's forgivable, right? I said, that's not forgivable. That money's tacked on the end. So when you go to refinance and you think your balance is $200,000, it's really $218,000, right? Remember, you got to pay that back.
Right, that doesn't go away.
It's interest free, all that. Now, there are some first generation loans out there that do forgive 20% a year for the first 5. That's one program. Another one forgives half of it after 10, the other half after 20. You'll never be there for 10. You'll never be there for 20. But, there are some forgivable things out there. The grant program that we're doing for $4,000, that's just free money. Welcome to Loan Depot. Give
You
us
guys
$4
are
grand.
always giving away.
We're giving it away.
Well, when you
Best
got that
rates,
kind of
free
when
money.
you got that kind of profit margin,
Sure.
Oh.
when
Yeah.
you've been gouging for as long as they have,
Now
they
we're
got
just-
billions.
now we're just giving it. Now we're
cash.
just
Just
giving
gotta
it back.
give it away.
That's good.
5%.
Minnesota should do.
Yeah,
The government.
No kidding. No kidding. Well,
Give
our-
it back.
So, Keith, I forgot to get a real estate update on the first part of the segment, but people always listen to this whole segment all the way
Okay,
through.
yeah,
so
from
go.
front to back. Update is about 7,100 homes on the market
Okay.
in the 7-county metropolitan area. About 900 houses a month flowing through the business. We've got great inventory, new inventory coming on. 10,000 more homes were listed this year than have sold. So in terms of flow through,
Yep.
very normal, very predictable, very steady. It's just a really steady, good market. So I believe that if you want a house and need a house and want to make that move, there is a house available for you.
Absolutely.
You just have to, be diligent in looking, and depending on where you're looking too. I mean, if you have a wide search area, you're easily going to find something.
Right.
There's just plenty of stuff.
And
out
then
there.
next week you're going to do it by elementary school district.
Yeah, Keith wants an by elementary school. He wants an analysis.
Break it down.
Break it down.
Analysis, and we'll post the spreadsheet online after the program.
I can help you
Sure,
with that.
I'm sure.
Yeah.
Give me a listing. Each of you give me one listing that you want to promote on this segment.
One listing, Keith, tell them about your Bloomington house.
I got to promote this property in Bloomington, 4,500 square feet, 870 pool, 5 bedrooms, 4 baths, 2 offices, flex space on the main level, vaulted ceilings, beautiful finished basement with a wet bar. The pool out back is gorgeous, wonderful, entertaining home. West Bloomington over by Dred Scott Playing Fields, right off 169 Old Shakopee, 870. Beautiful house.
Great house.
3763 Denmark Trail West in Eagan, 550,000, 5-bedroom, 4-bedroom.
Wow.
Wonderful flex room in the back. I'm going to do a video this week on flex room. Some people call them a bonus room. I call it a flex room. Just a terrific extra area in a house that you can use.
All the properties you hear on the radio show you can find on our website, hittnergroup.com, or you can give us a call about any house you see on any website, 612-627-8000. See you next week.